The weekly market movers. That's the first step to becoming a 10-minute trader. How do you read the weekly market mover report? That's been an area of confusion for people. We've changed everything, and we feel we've changed it for the better, but there is a little bit of confusion on the weekly market mover report. So let me go over it for you. Let me show you our most recent report, which we just finished today. We're just finishing it. This is our weekly market mover report from this week. I'll start at the bottom. At the bottom, there's a legend, okay? And the legend notates whether or not a trade is a prime trade or not. The WASD report is a prime trade. We traded it yesterday. I know you're dying to see that trade, and I'm dying to show it to you. So why don't I show you the WASD report just for fun, just to give us a break here, because it was awesome. Also, this was yesterday's WASD report. What's a WASD, I know you're asking? The WASD report is a grain report. It did something yesterday that scared people from trading it, but it didn't scare me because I've studied this report, and I know that the WASD report tries to scare us out of the trade. Watch this move. Before the news was released, it looked like the news came out early. Holy crow. That was a big move. Normally, that would be a warning, maybe, to cancel the trade. But I have seen the WASD report try to scare me out of trades almost on a monthly basis. So I kept my nose to the grindstone and I traded the report. And when it was over, in a matter of 9 seconds, I made almost $500. I did not let the WASD scare me. Our members sent me their profit pictures. One member made $150. Another member made $260. Another member made $687. Another member, the king of 10-minute trades, Enrico from New Jersey, made almost $1,500 on the WASD report. It was a great trade yesterday, and it tried to scare us out of it, and you don't want to be scared out of the trades. The weekly market mover is the replacement for the HIRA. George, it's much more sophisticated. It's significantly better, okay? We've improved them and made them full of more information. So you've got a schedule. The asterisk tells you when the trade room opens. So if you go to the top, say Tuesday, the core PPI report, let's analyze this particular line. You've got the event that's going to take place in the market, core PPI. You have the instrument, you're going to trade it with gold. The event takes place at 8:30 a.m. Eastern time, and the trade room opens at 8 o'clock because it's got an asterisk next to the 8 o'clock time. That's how you read it. And we list the risk as well. Okay? If it's a prime trade, we put our little prime trade icon next to the trade. If we're watching the report and not trading it and don't have a trade room, then you will not see an asterisk. For instance, this British report yesterday, it was at 4:30 in the morning. I did not get up to trade that report. It's an official report, but we did not have a trade room for it. You can tell if something is not an official report, and an official report gets a daily market mover pre-trade report the day before. If it's not an official report, it's usually in orange, and that means it's something we're just watching. It's in orange and it's in italics, okay? Any report that's in just italics will not have a daily market mover. Now this week we had very few trades. We didn't have any actually in italics because all of our trades were either official trades or there were trades we were just watching. But say on a previous week, you might have a trade in italics. Let me show you so you can see what I'm talking about. For instance, Chinese manufacturing, non-manufacturing PMI, you could see it's in italics. You could see that there's a trade room because there's a time with an asterisk, But because it's in italics, that means it's probably one of my personal trades, and there will not be a daily market mover report for it. It's just the way we work, that there are certain trades that don't get reports, and there's a variety of reasons why they might not. They might be trades that only recently are coming into their own, or it might be a trade that we really think is almost due to get a daily market report, and we're testing it, but we're testing it live. There could be a variety of reasons, but the legend will tell you whether or not a trade is going to have a report. If it's in italics, there's no report. If it's orange, there's no trade room. It's a watch trade only. And if it's purple, it's a trap trade. Okay? If there's an asterisk with a time, that's the time the trade room starts. You'll get used to it. It's not that complicated. Most of the time, we're going to have a trade room for a weekly market mover because that's the whole point. It's moving the market. It's on the report. More often than not, there's going to be a trade room. Okay? That's how you read the weekly market movers. What defines the risk level? Josh, I guess what defines a risk level is how much the report, how volatile the report is, what the odds of it being successful are, what the maximum times that it hasn't been successful, how much it moves. There's a lot of things that define risk. A very, very volatile report by nature is going to be considered more risky. Even if it's successful, if it's very volatile, there's going to be more risk because the stop might be larger. And risk is subjective also, Josh. So something that you might consider ultra risky, I might not.